This is the Millennial Realtor podcast. Thanks for listening and thanks for watching. I brought in a lender today to talk about the home buying process because you have a lot of questions about the home buying process as far as getting the funds to make the deal happen, to make sure that the escrow is speedy and smooth. And 90% of transactions are lost due to lenders not doing their job or appraiser falling out or whatever the case may be. So here today I have Leslie O'Neal from Movement Mortgage, and she is here to help me discuss about the process. So thanks for joining, Leslie.
Hi, how are you?
Good. So how long have you been in the lending industry?
I have been in the mortgage industry since 2003. So right out of college, I graduated in finance and then grew up in New Orleans, went to school in New Orleans, moved out here and got a job in mortgage. So right out of college, I've been doing lending.
Cool.
Mostly refis in the beginning and then now mainly purchase.
Cool. 2003, you saw a lot of stuff between 2003 to 2011 that were not so much fun, I guess.
Yeah, I got it when I got out of college and started the business. Like all you need to do is sign a paper and you got a loan. And now they want all your documentation, income, assets, everything to get approved. So it's definitely changed a lot since I started.
Cool. Blood types too, or
blood types, everything. Everything.
Well, most of my listeners are going to be millennials, so they're going to be first-time home buyers or people moving up for much larger purchases. And the biggest holdup in a transaction has been the lending side. And on numbers, and I think your company has shown 90% of transactions fall out of escrow because of the lender.
Correct.
So can you go over just your overall lending process and from start to finish and how you guys do everything overall?
Yeah, so basically why I started working at Movement Mortgage is because of their process.
Okay.
So what they do different than other companies is instead of just having the loan officer review your file and issue a pre-approval letter, they actually underwrite your file up front as a pre-approval, and so that you have a fully underwritten approval. So basically, what some companies do is they do a pre-qualification letter. And that's just basically taking an application from a client and running their credit and going off of the information they're giving you over the phone and running it through an automated system through Fannie Mae or Freddie Mac and issuing a pre-qualification letter. With that, you haven't verified anything. You're basically just going off of what they're telling you. And with people that are like self-employed or get commission, bonus, you need to review that documentation. So then there's the next step, which you can do as a pre-approval, where the client sends you all their documentation, you review it, and issue a pre-approval letter as the loan officer. But guidelines change all the time. Loan officers could miss something. The underwriter is the final say on the loan. So that's where Movement jumped in and said, we're gonna, create this process so that there is no fallouts. Right. That the deal doesn't fall out because of underwriting. So what we do is we take all the paperwork that you've sent to us, we submit it into underwriting, and have that underwriter who makes a final decision on the loan issue the pre-approval letter. So that when you go into contract, you don't have to worry that your loan's not gonna go through based off income, assets, credit, that kind of stuff.
Okay.
So.
That's awesome. So just you guys get in there, you jump in the front and just take care of all the headaches mostly that come out.
Mostly headaches. The only thing we can't take care of in front is the appraisal, title, that kind of stuff, because that's something until you have a property you can't order that.
Sure.
So
okay.
All the other mess is done up front.
Okay.
Yeah.
And then I guess going through the whole escrow process. And I think it's some of us, kind of chuckle about it all the time is the fact that, you're getting this nice big house, and then all of a sudden you're getting a credit card application in the mail, or you're getting car loan information. So, what do you do at that point as far as what?
So we advise our clients in the beginning is do not do anything to your credit while you are in the pre-approval process or in escrow. Don't do anything until the loan is closed. So basically, you don't want to open any new credit cards. Don't have your credit run by numerous people. Don't buy a car. If for some reason your lease is up while we are doing this, let us know that up front so that we can factor in whatever the new lease payment is going to be into the loan. We just don't want you, don't close credit cards. If you have collections and those kind of things, talk to your loan officer in advance before you pay anything off or settle for something. Make sure once you run your credit with the loan officer, you want to review all of that with them first before doing anything. But don't buy furniture. Don't do any of that.
Don't do anything. Don't buy anything. Cash.
Yeah,
Cash. Just draw it all out and just sit on it for a month.
Yeah, exactly.
Okay. Now credit scores. You talked about how you're drawing up, looking at the credit scores. How do you guys manage that as far as a consumer? As far as with the 3 different companies that you're looking at. So how do you determine the loan?
So basically we have TransUnion, Equifax, and Experian. We have to pull all 3 bureaus, and we will take the middle score of the 3. So, and from that point, we can, depending on what type of loan you're doing, we can go down as low as 580 on an FHA or VA loan. Any conventional loans, it's 620 credit score or above. And to get the best rate, you're looking at over 740 or above to get best interest rate. And on jumbo loans, even the higher rate the higher credit score that you get, the better rate you're going to have. So if you have over 800, if you're in a jumbo loan situation, you're going to get a better interest rate.
Excellent.
But 580 is the lowest we can do.
Okay, that's cool. And then something comes up on the credit report. How do you guys manage that? So there's a surprise that there's a judgment, or there's something that comes on a credit report. How do you guys manage that for the borrower?
Well, basically, if there's judgments or tax liens or anything like that, we want to catch all that up front so that we know if they're set up on a payment plan with the IRS. Judgments will have to be paid prior to closing on the transactions. That's why it's really good to get the fully underwritten approval up front so that we catch all of that up front. You don't have to worry about that when you make your offer on your house, and you're not scrambling at the last minute to get these things done while you're already in contract on a property.
Okay. Okay, so that's why you want to get it done up front with you guys.
Up front, yes.
Get it all done, so there's no surprises.
No surprises. You don't have to worry about your deposit that you put in. You make sure you meet your contingency periods. And also, we're very quick. So when you send us all the paperwork, it's not like there's a 2-week lag time to get this fully underwritten approval. Our approvals are underwritten in 24 hours.
That's awesome.
So you're going to get it, just take the extra few days up front to do the work, and it's going to save you a lot of headache.
And I think that's the biggest part about using your services is that you guys have that backed up, that everything is fast, done right away. And I think, from my understanding, is that the underwriters are rewarded or penalized through the process, or am I talking about something else?
It's processing. So processing is reward. If they get the loan clear to close within 7 days, they get a bonus, and if they don't, they get a deduction from their pay. So everybody's on this rat race to get all the conditions clear within those 7 days, so that not only that the buyer meets all their contingencies, but the processor gets their bonus.
Right. Okay. So that's the incentive with you guys on that part. So okay, and I guess that's a good topic as far as working with a big bank versus a direct lender such as yourself, is that you have that streamlined process. You have that. You're not going to be working with someone who's you're going to get 2 weeks later from across the country.
Right. Yeah, I don't have to dial an 800 number to contact my underwriter and sit on hold while you talk to different people all the time on your file. That's why, again, I went to Movement Mortgages, because I can literally pick up the phone, call the underwriter directly, go over conditions that they've put on the approval, and explain myself and the client to them, so we can get everything handled. And everybody wants to get your loan done and works together to get it done, and in a timely manner. Yeah.
That's good. And okay, because I with one of my first buyers, we had to call. We called to North Carolina, and then we called to Texas, and then we called somewhere else. It was just a little bit of a rat race on it, but the forceful nature, and actually I think I called the president's secretary. So that and eventually got it done. We closed 2 days earlier than expected. So.
And we also have a thing called loan committee with Movement. So if an underwriter doesn't think your file is, approvable, it can't just be denied by that underwriter.
Oh,
It
wow.
has to go to what's called loan committee to get second reviewed. So, or have, their underwriting managers review the file before, it gets denied. So it's another big step that Movement has, that one person can't say, this isn't gonna work. Then it goes to a second level of review.
Well, that's good to know. I think some, working with first-time home buyers and millennials who are just, shocked about the process and are just a little bit, scared on buying this big asset, they want to make sure that, they have a chance to get the next house. So I think that's great. There's other questions that I have through the process. The termite issue. So, no, I think I'll skip the termite for right now, but the appraisal. So how do you guys conduct the appraisal from the lending side?
So basically, when we normally order the appraisal right up front, unless the agent tells us that they want us to hold off for whatever reason.
Okay.
But basically, once you go into contract, we issue loan disclosures for the buyer to sign, and then as soon as they sign that, they will send us a credit card form. That's something that the buyer has to pay up front, is for the appraisal. So appraisals are usually like $500 for a conventional FHA. VA can sometimes be more than that. Jumbo could be a little bit more than that. But once you sign those disclosures, we want to get that appraisal ordered right away so that we make sure we meet those contingency periods. All appraisals are ordered through a management company that we work with, except the VA. VA appraisals are ordered through the VA. And those can take longer than a regular conventional or FHA. So conventional FHA loan, jumbo, we can get those back 5 days, 3 days on a rush. If the buyer wants to pay an extra $100 for a rush fee, and then the VA is 10 days from the day we order it.
Okay. And so the appraisal comes back, and what happens if the appraisal's off? Let's say that the house is for $1 million and it comes in at $990,000.
Okay.
So what's the process there?
So we can either go back in and do a rebuttal on the appraisal. So if the realtor has other comps that they feel like the appraiser didn't utilize, we can go in and send those comparables into the appraiser and see if they will adjust the value to what, the higher value.
Sure.
To the purchase price. If we don't have comps to support it and the appraisal is what it is, it has to be reviewed by underwriting. Then underwriter will say it's good, and so we're at $990, for instance. So either the seller can come down to what the appraised value is, or the buyer can come in with the difference.
If they really love it.
If they love it, yeah.
If they really love it, and the seller wants to sell their house because they have to move somewhere else, then they're gonna lower it. Okay. And so on that appraisal process, now termites. How do you guys manage that during the contract period of time?
So for termite, it's not required on conventional or FHA. We do not require a termite report. So a lot of, we'll leave it out of the contract so that we don't have to, we don't see
tie it to the loan.
Tie it to the loan, basically.
Okay.
On a VA, it is required. So normally you have all section 1 completed, but there's a lot of times if the report comes back and there's stuff on section 2 is something that the lender feels needs to be done, we have to complete section 2 as well, because VA again it's required for the termite. But as long as on the final closing statement for conventional jumbo FHA, there's not a charge on there for the termite, then we don't require the report at all.
Okay.
So that would just be something you would handle directly with the seller and not have to deal with the lender.
Okay. So that's good as far as knowing that's concerned. I think because everyone, they hear termite, they hear, process, so they think that it's all combined or it's not. It probably used to be, I believe at some point where termite was required with loans.
It was, yeah.
So now not anymore because it's kind of messed the whole, process from here on out. Yeah, so
you definitely want to make sure on a VA termite's done right away. Yeah.
Okay. Now, with holdbacks, you and I kind of know the term. So, what is it? What is a holdback?
So basically, like if there's work that needs to be done on the property, but they don't have time to do it prior to the loan closing, you can have escrow hold back a certain amount of money to get that work done right after the closing. And so basically, once the work's done, they pay the money directly to the contractor that is doing the work on the house. Normally, escrow holdbacks can be less than $2,000. If you have something that's higher than that, it's going to cost more money. Then we have to get that approved through underwriting, and then, basically like the lender will hold that money back and then pay it out to the contractor that's doing the work on it after closing. So it's done. 2,000 is pretty easy to have approved, but anything over that, it has to go to upper.
Sure. Yeah, if it's a larger amount, I think we're talking about rehab loans at that point, or
right.
And that's a different topic for a different episode that I will have coming up. Okay, so I remember the question that I had. I guess the thought that kind of stuck with me is termite. Just for make sure that our listeners aren't knowing as far as Section 1, Section 2. Section 1 means wood damage to the property. There's structural damage due to the termites. Section 2 is that there is a infestation in the property, so it might have to be tented or whatever the case may be, or a warning to the consumer. So, and then with Section 1, Section 2, if it's required on the contract, obviously you guys are going to say, hey, we need termite completion signed off by the buyer, and potentially maybe a holdback as well. So going back to that holdback that we talked about briefly. So that's pretty much it on that. Okay. Now the closing and the TRID rules, so you got the approval, you passed the appraisal, you passed the inspections, you passed everything, you passed your the appraisal's condition of the property. So what happens between now and the closing?
So once the loan is, the appraisal's in, condo's approved, all income assets, everything's done, we submit the file in for a clear to close. And our clear to close process takes about 24 hours when we submit it into underwriting for them to review it for final review. There is a document that has to go out, it's called the closing disclosure. Most companies will not send out the closing disclosure until the loan is fully clear to close. Our company will send out the closing disclosure prior to that, once we have an approval on the loan, so that when the buyer signs it, there's a 3-day wait until they can sign loan documents. But we like to issue the closing disclosure in advance so that we're not waiting until the last minute to issue the closing disclosure and not meeting the the close date. So we don't wait until the loan's clear to close to send it out. We send it out prior to that. So then once the loan's clear to close, we can get docs out right away.
I mean, it sounds easy on when we're talking about it, but
right.
but when you're in the middle of the process, it's just like, oh, what now? What next?
Now?
What next? What's coming up as far as that's concerned? And then you have the CD go out to satisfy the TRID regulations, and then you have loan docs. So what happens at that point?
So basically, once the loan's clear to close, the escrow company and movement will work together to finalize that closing disclosure.
Okay.
And then it'll show the buyer how much cash they're going to have to bring in to the penny, of what they need to bring in, and we issue loan documents. So once the loan documents are issued, escrow will contact the buyer and have them come in and sign documents. So this is going to be the final set of loan documents showing rate, payment, cash to close, everything, term of the loan, what type of loan you're getting. It's going to be a lot of paperwork that you would sign at the end. And then you would have to wire your funds to close so we can fund on our end the loan.
Yeah. So folks, whenever you're getting those rate, lenders, bankers, whoever's going to be talking to you, know that you're not going to know the fully, end payment until you go through that whole 30-day process.
Yeah.
So just have an idea of what it is, but don't, think it's the set in stone as soon as you close.
Right, because things can change. You might get multiple quotes on your homeowner's insurance, and the homeowner's policy, could be different from what you originally started with, and property taxes and things like that. HOAs are, could be different. So when we pre-approve you, we kind of give you an estimate on what HOAs are in that area, what estimated taxes are in that area. But until you get that specific property and you get that homeowner's quote and you get the HOA and the tax completely correct, you'll know that in the end.
Yeah, that's good to know. And I guess one topic that I kind of left off just while we're talking about this is HOA. So how does a lender like yourself approve an HOA to say, hey, you're okay with getting a loan here versus not approved? What's the guidelines?
So basically we have to go through condo underwriting. So if you're buying a condo, we have to submit the HOA contact information management company, and the lender will order what's called a condo questionnaire. And they have to answer certain questions they have to answer all the questions on the questionnaire, and then the questionnaire has to get reviewed and make sure it's an approvable complex. We have to review the budget. We have to review the master policy to make sure there's enough homeowners coverage on the outside for the outside of the condo. We also have to, see what the occupancy ratios are, how many primary residences, how many investment properties are in the complex. If the complex has any litigation, that's another reason it could not get approved, is due to litigation. But we don't just, with our company, we don't just do a hard stop on things. We'll review litigation and see what it's about and see if we can still approve that complex. And depending on how you're buying the property, if you're buying as a primary residence, then you may not have to meet those occupancy ratios. If you're buying as an investment property, depending on how much you're putting down, you may or may not have. So there's a bunch of different guidelines to it, but again, we order that stuff right away, so that's all done within your contingency time period. And then also, if your realtor knows that you are wanting to buy in this complex ahead of time, we can get the complex approved prior to you even going into escrow on it. So we can get all those docs up front. If for sure we're gonna want to purchase in here as soon as a property comes available.
Right.
So.
Well, I'm assuming also on the list side of things too, because I had a client in an area that had some litigations, and your company was pretty quick on removing some of those litigations, made it easier to sell in that area, which was Ladera Ranch of a condo, and there were some pinhole leaks and it led to lawsuits, and then there was some settlement that worked out between the builder and the people that own the properties. So, and you guys were real quick to get that flipped around and turned around to make that sellable, because that not only does that help the buyer, but also helps the seller get the highest possible dollar that they can get.
Exactly.
So you guys do a tremendous job as far as adding value to that community there. So okay, and then with the HOA approvals, what else do we have to talk about for HOAs? Because
well, if we talked about conventional, so with FHA, they up until just recently, you had to have the complex FHA approved prior.
Folks, this is news right here that you're listening to right now. So Leslie's the pro on that. So the new regulations is?
It will start today.
Okay.
October
today.
15th, yes.
October 15th.
So before, you actually had to have the complex FHA approved prior to going into contract on that property. Now, you don't have to have it FHA approved up front. We can get the complex FHA approved during the transaction, as we do with conventional loans. So we still have to order all the same documentation that FHA would have ordered to get the complex approved. But we can now do it while you're in contract. So the complex does not have to be FHA approved. And then VA, it has to be a VA approved complex to get it, to get the loan to go through for VA.
But the difference between, and you can correct me because you're the expert on this, so the difference between VA and FHA is that VA, once it's approved, it's always approved.
Yeah. FHA was every 2 years.
Did they change that? Or is it still
not
2
that I
years?
know of. It was 2 years.
Still 2 years at this point, October 15, 2019.
Yeah.
Gotcha. Okay. Yeah, that's phenomenal. So, and I'm going to have your website linked into the description and your telephone number. So if anybody wants to get a loan, and you're approved in California and
Louisiana
and Florida. Okay,
yes.
So 3 states. So if you're listening in any one of those 3 states, you want to call Leslie to help you with your lending possibilities, refinancing, and purchasing at this time. What else? Anything else about the HOAs? So I guess with FHA approval, areas that have an enhancement fee or anything else will never get a FHA approval.
Currently, right now, no, they're not allowing FHA in this area.
Okay,
yeah.
That's interesting.
Not right now, but I'm not sure if that's going to be changed anytime soon. But
Yeah, so
currently, right now, any with enhancement fee is not going to.
Gotcha.
Rancho,
Mission Viejo,
Ladera Ranch, yeah.
Yeah, so some communities near us are not FHA approved, but maybe HUD might change that anytime, just like they do with the condos, to make it easier for people to buy in those communities. So, okay. So, Leslie, about yourself, what do you have to say as far as, contacting you and your...
So best way to contact me is, via my cell phone, or text, email. I'm always connected to this phone. So I work, nights. I help agents and clients on the weekends. So you can contact me at 949-933-7055. My email address is Leslie, Leslie .O'Neal, ONEAL @movement.com. So again, best if you don't get me on the phone right away, text me. I'll give you a call right back. I'm very available, as a lot of the agents know.
Yep, absolutely.
So
you're helping one of our buyers right now, and it's moving very quickly as far as how it's working out. I can't really talk about the details because we're in contract, but you guys are doing a good job as far as from your end. And from what I understand, the buyer is really happy with working with you. So. And so we appreciate that.
And I have an awesome team too. I have an assistant, Shelly Mooney. If I'm, for whatever reason, unavailable, shout out to Shelly. She's on it. She's so personable. Everyone loves her. So she's like my sidekick. So.
Good. Well, thanks for coming in for this interview. I know it's not everyone wants to be filmed and listened to all the time, but I appreciate it. I think our listeners are going to appreciate what you have to say as far as working through the process. And everyone, thanks for listening to the Millennial Realtor podcast. And until next time, we'll chat soon.